All right, welcome to lab number 14. The purpose of this lab is to help you practice order placement using bracket orders. For that, I'm going to use thinkorswim's on-demand feature to illustrate how to place the order after we've identified our price points for the stop, entry, and target. And all it is practicing placing orders, either long or short, with both a target and a stop loss based on supply and demand zone formations. Now, if you do not use thinkorswim, no worries, but you'll need to pay attention to the type of orders that go into the bracket order so that you can duplicate it on your preferred platform. However, I will include a link in the video description on how to download thinkorswim and get it customized as a stock trader. Now for the lab, as per usual, I'll demonstrate how to complete the exercise and then you'll have a chance to try it on your own. Now looking at the chart, you can see we have Apple. We have it on a 1 hour intraday time frame. There's a demand zone for entry that begins at $154.43 and it ends at $153.27. You can also see the target supply zone beginning at $164.97 and ending at $166.48. Our target is set to 80% of our potential trade reward just below the opposing supply zone, and that target is set at $162.86. And this is where we plan to exit the trade for profit. So now what we want to do is take the data from the chart and place it into our order cancels order bracket using thinkorswim, confirm the data is correct, and then send the order. So now to do that, what we want to do is either right click on the chart, or if we're using a MacBook, we can hold down the command key and then click, and that will bring up a pop-up box. And then what we want to do is scroll down to buy custom because our entry is located within a demand zone. And then we want to select with OCO bracket. Now selecting that option should bring up an order bar, which you can see here on the screen in the lower right hand corner. From there we can begin inputting the data from the chart we've marked to place our bracket order. Now on the top section of the order bar, looking from left to right, we see things like stock, buy, plus 100 for quantity, and the symbol AAPL. If we keep looking to the right, we see price. And what we want to do is look at this area right here, and we want to make sure that we're paying attention to the type of order that is associated with that price point. Okay, so this green bar is green because we're buying, and green represents buying. And what we want to do is make sure that this price here is the same price as our proximal entry for the chart that we've marked. So what we're going to do is go ahead and change this to $154.43. Make sure that it says limit order, okay? And then the price below that, this is our sell limit order. And this is where we want to sell to take profits. So we're going to change this number to make sure that it matches our long target, which is 80% of the reward, and that price is $162.86. So we're going to put our target price here, 162.86, and again making sure that it says limit. And then this next area here is where we're going to put in our stop loss. So we make sure that it says market stop. Okay, and we're going to change this to make sure that it matches our stop loss from our chart, which is located at $153.16. So we'll change this to 153.16. Okay, now if we look at this area here, we see that each one of these says day. And basically what that means is if our order is not filled within the day, then this order will automatically cancel. Okay, now typically what I will do is I will leave this on one day and I will change the sell limit and the stop loss to GTC, and GTC stands for good until canceled. Now you can also change this to GTC if you like. You can leave all of these on a day. It just depends on your own preference. Me personally, I like to leave the entry order good for the day. And then if my order doesn't fill, then I'll go in the next day and replan the trade. But if it does execute, I don't want to exit the trade until one of these price points is hit. That's just my own personal preference. At any rate, once we've verified this information, make sure it looks good, we hit confirm and send. That will bring up one final order confirmation dialog pop-up box. And then once we've verified this information, then we can go ahead and hit send. And then once we've done that, we'll see our limit order. We will see our proximal entry, and we will see our stop loss. All of that placed on the chart. And then if this were a live order and we see that, price is moving in our favor for whatever reason, and we decide we would like to move our stop loss, we can simply click it and drag it up. And we can move it to wherever we would like. That would bring up another order confirmation dialog box, in which case we would send it in order to place that order. Okay, you'll have an opportunity now to do this on your own using SPY on a 1-hour time frame. As you can see here, I've drawn out both a demand zone and a supply zone for entry, and this is for purposes of illustrating both the long and short OCO bracket order. So we'll just be using the data from the chart to place the order. For the first exercise, we'll use the demand zone for entry. Our proximal line is at 408.66. Our stop loss will go 21 cents below the distal line located at 405.02, which means our stop loss will be at 404.81. We'll set a target to go long at 423.35. This is just below the supply zone, which begins at 427.03 and ends at 429.66. So again, you're going to use the data from the long target, which is calculated at 80% of the reward, and that price point is 423.35. You're going to use the demand zone proximal line entry price point at 408.66, and you're going to use the demand zone entry stop loss, and that is located at 404.81. Alright, so go ahead and pause the video, and when you're done, unpause the video and we'll look at your answer. Go ahead and pause the video now. And the correct answer is... Alright, and here you can see the correct answer. We have our long target, which is 80% of our reward at 423.35. We have our limit order here to sell if the trade goes in our favor. We have our demand zone proximal line at 408.66, which corresponds to our limit entry order. And we have our demand entry stop loss at 404.81, which likewise corresponds with our stop market order. Okay, you'll have an opportunity to try this again using SPY once more. Same time frame, same place on the chart. However, this time we're going to use the same zones to go short instead of going long. So as you can see, I've drawn out a supply zone for entry. Our proximal line is at $427.03. Our stop loss will go 21 cents above the distal line located at 429.66. That puts our stop loss at 429.87. The target, which is calculated at 80% of the total reward, which is the distance between the supply and demand zone proximal lines, which will go just above our opposing target zone. The opposing target zone begins at $408.66 and ends at $405.02. So now that we have our price points for our stop, entry, and target, we will place our order cancels order bracket to go short using the data from the chart. Just to reiterate, We have our supply zone proximal entry at 427.03. We have our supply entry stop loss at 429.87. And we have our short target, which is 80% of our total reward, at 412.33. All right, so go ahead and execute the OCO bracket order. And once you are done, unpause the video and we'll take a look at your responses. All right, go ahead and pause the video now. All right, and the correct answer is... And here we have the correct answer. Now, I did leave the order bar up because I understand that whenever you're going short, it can become a bit confusing. Just remember that anytime you're selling short, you are always selling first and buying in order to close the position, whether it's for a profit or a small loss. Okay, so we have our limit entry order at 427.03, which should match the proximal line of our supply zone because that's where we're entering the trade. We have our buy limit at 412.33, which should match the short target calculated at 80% of our reward. And we have our market stop order at 429.87, and this should match our supply entry stop loss up here. All right. Once we've verified that all of that matches and that our entry is a limit order, our buy to take profit is a limit order, and our stop to exit the trade in the event the trade works against us is a market stop order. All right, once we've verified that, we click confirm and send. And then once we've sent the order, all of the lines should match up with the drawings from the chart. Okay, so the limit order for entry matches the supply zone proximal line. The stop matches our stop loss drawing that we've placed there. And the buy limit to exit matches the short target, which is calculated at 80% of our reward. That will conclude this lab. Before you move on, recall that the first part of a bracket order is the order sends order. This is when your initial entry order is filled, which then sends the order cancels order. And the order cancels order consists of two exit orders, the stop and the target. Now, using some examples from previous lessons, create a long bracket order utilizing both the OSO and OCO brackets. And using some examples from previous lessons, create a short bracket order utilizing both the OSO and OCO brackets. Hope to see you in the next video.